Stop whatever you're doing right now and listen closely, because what I'm about to reveal could directly change the way you think about your money, your savings, and even your future. In a stunning announcement that has already sent shockwaves across Wall Street and Main Street alike, the Federal Reserve has just made a move that nobody saw coming. A move so bold, so unprecedented, that experts are scrambling to understand what it really means. And here's the shocking part. This isn't just about interest rates or inflation. This isn't just another policy tweak hidden in the fine print of economic reports. No, this is about stimulus. Real stimulus. A new wave of financial intervention that could impact millions of Americans, whether you're retired, working, or simply trying to keep food on the table. So what exactly did the Fed announce? And why are analysts calling it the most dangerous and possibly the most beneficial shift in U.S. financial policy in decades? Let's break it down. For months, whispers have been circulating about whether the Federal Reserve would pivot. Some believed they would stay the course, keeping interest rates high to battle inflation. Others speculated they would begin cutting, opening the floodgates for cheaper borrowing and potentially boosting the economy. But what nobody expected was this. Instead of simply raising or lowering rates, the Fed has hinted at a direct form of economic stimulus. Not through banks, not through corporations, but directly, potentially into the hands of American households. Yes, you heard that right. A plan that sounds eerily similar to past stimulus checks, but with one major twist. This isn't Congress. This isn't a political negotiation stuck in Capitol Hill gridlock. This is the central bank itself, and that has economists everywhere on edge. To understand just how big this is, we need to take a step back. Remember the 2008 financial crisis? The Fed introduced quantitative easing, flooding markets with money to stabilize the system. Then came 2020, when direct stimulus checks hit Americans' bank accounts, providing immediate relief in the middle of the pandemic. But this time, it's different. The Fed's new plan is being described as a digital stimulus framework. Instead of relying on Congress to approve new spending, the central bank may soon have the tools to distribute relief directly, possibly through a central bank digital currency, something that has been quietly in the works for years. If true, this could mean that the Fed, not politicians, decides when and how Americans get financial relief. And that's where things get truly shocking. Think about the power this represents. For decades, the Federal Reserve's influence has been indirect, adjusting interest rates, buying bonds, nudging banks. But never before has the Fed had the ability to directly reach into the wallets of everyday Americans. If they move forward with this plan, the implications are staggering. Imagine a future where stimulus checks could arrive instantly. Not after weeks of debate in Congress, not after endless delays with Treasury departments, but automatically, as soon as the Fed decides the economy needs a boost. Sounds like a miracle, right? But here's the catch. Experts are warning that such power, concentrated in the hands of unelected officials, could reshape not just the economy, but democracy itself. By bypassing Congress, the Fed would essentially be stepping into the role of fiscal policymaker, a role traditionally reserved for elected representatives. And this has sparked a fierce debate. Some call it the most efficient way to stabilize the economy. Others see it as a dangerous overreach, one that could erode checks and balances and put far too much authority into one institution. But beyond politics, there's another critical question. What does this mean for you? Let's say the Fed implements this digital stimulus mechanism. Here's how it could play out. Imagine inflation spikes again. Instead of waiting for Congress to debate relief bills, the Fed could instantly deposit digital credits into your account. Relief you could spend immediately. On the other hand, if the economy overheats, they could just as easily pull those credits back or restrict where and how they're used. In other words, the Fed wouldn't just be stimulating the economy. They would be controlling the flow of money in ways we've never seen before. And that control? It could change everything from how you shop, to how you save, to how you retire. Now let's dive deeper. Because the Fed's announcement wasn't just about stimulus. It was about the future of the dollar itself. For months, rumors have swirled about the development of a U.S. central bank digital currency, or CBDC. Many dismissed it as speculation. But today's announcement all but confirms it. The Fed is actively exploring ways to roll out a digital dollar. And once that digital dollar exists, distributing stimulus becomes as simple as pressing a button. But ask yourself this: is that a blessing or a curse? Supporters argue that a digital dollar would finally bring efficiency to the outdated U.S. financial system. No more waiting for checks in the mail. No more lost payments. Money could move instantly, securely, and directly. But critics see the dangers. With a digital dollar controlled by the Fed, every transaction could, in theory, be monitored, tracked, and even restricted. Privacy advocates warn this could open the door to unprecedented levels of surveillance. And when you combine that with stimulus powers, the question becomes chilling. Will the Fed use this tool to help Americans or to control them? Let's not forget the global angle. While America debates the Fed's role, other nations are moving fast. China has already launched its own digital currency. The European Central Bank is preparing its version. If the U.S. doesn't act, it risks falling behind in the race to dominate the future of money. And make no mistake, this is a race. Because whichever country controls the leading digital currency could hold extraordinary influence over the global financial system. So perhaps the Fed's shocking stimulus announcement isn't just about helping Americans today. It's about securing America's dominance tomorrow. But here's where things get really tricky. For seniors living on Social Security, for workers living paycheck to paycheck, for families already stretched thin by rising prices, the idea of fast, automatic relief sounds like a lifeline. The prospect of knowing the Fed could step in during tough times, without the gridlock of Congress, is almost too good to ignore. Yet, the trade-offs are real. What happens if stimulus becomes a tool not just for relief, but for control? What happens if certain purchases are restricted, or if relief is tied to government-approved behaviors? That's not science fiction. That's a real possibility experts are warning about. So where does that leave us today? The Fed's announcement has shaken confidence, thrilled some investors, and terrified others. Markets are reacting with uncertainty as analysts try to predict what a new era of direct stimulus could mean. And for everyday Americans, the reality is this: we are standing on the edge of a transformation unlike anything we've seen in modern financial history. The dollar as we know it may be changing. The way stimulus works may be changing. And once the door opens to this kind of direct central bank intervention, it may never close again. Here's the bottom line. The Fed's shocking new announcement isn't just another headline. It's a warning sign, a signal that the rules of the financial game are shifting, and shifting fast. Whether this ends up helping or hurting you depends on how prepared you are, how much attention you pay, and how willing you are to adapt to a future where money itself could look very different. So stay alert, stay informed, and above all, don't ignore the signals, because the next stimulus might not come from Congress, but from the Federal Reserve itself. And when that happens, everything changes. Disclaimer: this video is created for informational and educational purposes only. It is not financial advice, legal advice, or investment guidance. The content is based on publicly available information, opinions, and speculative analysis. Always consult a licensed financial advisor or trusted professional before making any decisions related to your money, benefits, or investments. The creators of this video are not responsible for any actions taken based on this information.